The last member's comments in respect of problems within the dairy sector. The problem within the dairy sector is they've paid too much for their farms. Debt in the farm sector has gone up by more than 2 or 3 times in recent years, and as a consequence their interest bills are unaffordable for some of them. The impact of emissions pricing is relevant, but it is not nearly as significant as their interest bills on their inflated capital prices. I want to just deal in the couple of minutes that I've got with the issue of gross public debt. The Governor in the Financial Stability Report on page 8 sets out a graph showing OECD averages for government debt. It shows that by the end of next year, the average for OECD countries will have gross public debt of 100% of GDP. 100% of GDP. If things don't change in places like Japan, their debt's going to reach 300% of GDP by 2040, 200% in the UK and 150% in the US. None of those situations are faced by New Zealand because of the prudent fiscal management of the last government, when we left net debt of 0, gross debt of around 17%. And to have John Boscawen say, the problem is that the spending was out of control, well, you've had the opportunity to cut it if you wanted to. You have cut some of it, but you haven't cut most of it because most of it was prudent. And the big problem now is that we've got a structural deficit caused by unaffordable tax cuts. And if you think that that's true or not, I think I ask you to look at the Bill reports following the budget on the financial outlook for New Zealand. The future deficit forecast by the government relies on a very significant rebound in non-residential business investment. Non-residential business investment has been going in the opposite direction. Business confidence is down 3rd month in a row. And it is plain that the government's deficit next year, in my opinion, is going to be higher than they projected in their rose-tinted version of events this year. And why? Because they wanted to give 35% of their tax cuts to the top 5% of income earners. They could have so easily avoided that growing deficit by not borrowing for tax cuts, and indeed by not having as generous a tax cuts and not running as big a deficit. Instead, we have government debt going up, gross government debt going up, and net government debt going up as well. Mr. Speaker, it is true that New Zealand is relatively stable in our financial sector. That is largely because of both the strong balance sheets of the Australian banks and the prudent fiscal management by the last government.
Sorry to interrupt the honourable member, but the time has come for me.